Good afternoon, my name is Jordan Lambert, market analyst at Jalotama Management. Gold has taken a hammering in the last 36 hours as Federal Reserve Chief Bernanke on Wednesday implied that if the current trend of economic progress does continue, then the exit of stimulus will begin. Although the language he used was very similar to previous statements, highlighting that it will be data dependent and signalling that the Fed is not very comfortable at present to give any specific timelines, which sort of makes it feel like gold's battering has been a little bit overdone. This may be why price has surged over $20 this morning from a low of 1269.5 into the 1290s. Let's just take a look at the charts at the moment. Technically speaking, we are oversold. Looking at the daily chart and according to the RSI, the stochastics and the Bollinger Bands. However, any potential bulls should probably wait around 24 hours after such a decline that we have seen and let the market stabilize on lower volatility before looking for long opportunities. If today prints a mildly bullish candlestick, then look for long opportunities on Monday, because by then the RSI and the stochastics will have returned from oversold territory and generated buy signals, and possibly the Bollinger Band will have price will have moved back within the Bollinger Bands. So definitely consider just sitting on your hands, waiting and seeing which way the market is going to move. After such a decline, it's very often that we see range bound activity, but if we do see a bullish candlestick on some level, it's likely that we will see a reversal. But be aware that this strategy is risky because you are going against the overall trend, and the overall bearish trend could resume itself at any time, so do be careful. The main event today is the Bank of Japan's Governor Kuroda is talking before a press conference, and given that the Japanese stock market has been rather weak of late, he is likely to try and revive the stock market and he is likely to reinforce his determination to achieve a 2% inflation goal within 2 years, and he will do this by weakening the yen. So if he can convince observers that he is intent on achieving 2% inflation, then the yen should weaken, the Japanese stock market should have a rally, and if the yen weakens, then the dollar-yen pair would strengthen, and again this would put pressure on gold and put the more power back into the bear's hands. So be aware of that. And given the oversold levels technically and probably from a fundamental perspective, if you view the recent sell-off as a little bit overdone, and given the volatility, just be very careful, extra careful trading, because it could go either way. Best thing to do is just let the market stabilize, and then we'll see a trend emerge from there. But definitely, if we get at least a mildly bullish candlestick today print on the daily chart, then look for long opportunities on Monday. Thank you very much for listening to me. I'll speak to you again on Monday. We have a fantastic promotion for new accounts at the moment. If you are interested in checking out the details, you can visit our Facebook page or you can visit our LinkedIn. Alternatively, you can visit the website Jalotama Management. The required links are below this video. Speak to you soon.